committee. Ms. Bean.
The gentlelady is recognized for 2 minutes.
I thank the gentleman for yielding. Mr. Speaker, I rise today to urge my colleagues to support H.R. 1728. As an original co-sponsor, I want to commend Chairman Frank for his leadership and also thank Mr. Watt for working with Congressman Castle and I to refine the qualified mortgage safe harbor to ensure that traditionally safe, stable loans are included. Today's bill follows up on the important work this House did early last Congress. Unfortunately, despite the strong bipartisan support of that bill, the Senate failed to act. I'm hopeful that this year's bill will more swiftly move through the Senate and to the President's desk for signage into law. H.R. 1728 brings mortgage lending back to reality. It will ensure that mortgages are fully underwritten, income is properly documented, and borrowers have the ability to make their payments. The subprime mortgage crisis that we continue to deal with today wouldn't have happened if we had not relaxed bedrock principles of sound lending and underwriting. The bill requires lenders to keep some skin in the game for the loans they originate by requiring them to retain 5% of the loan value when they seek to securitize a mortgage in the secondary market. This concept of risk retention was endorsed by the New Dem Coalition as part of our reg reform principles in February this year, and we're pleased to see it included in the bill. I'm also pleased that it maintains a provision I wrote last Congress regarding the disclosure of negative amortization loans. Negative amortization occurs when unpaid interest gets added to the principal balance of a loan. Some borrowers enter into products with negative amortization, not realizing that they're adding to the cost of their mortgage each month instead of paying principal down. The underlying bill requires lenders to disclose to borrowers if their loans allow the practice and requires credit counseling from a HUD-certified credit counseling agency for first-time borrowers considering such a loan. All of our constituents want better consumer protections and simpler disclosure of mortgage terms. They want homeownership to mean qualified borrowers make their payments, build equity, and keep their homes. I urge my colleagues